One of the interesting stats is that the BlackRock Bitcoin ETF has had more net flows than QQQ year to date. Right, so just massive flows there, over $500 million just yesterday alone. And so I think what a lot of people say is, well, that was the first one. Is the second one going to be as big? And I don't think that's true, right? If you just go and, before I came on, I looked at all the major news sites. People aren't talking about it as much. And so the media attention, the hype, all that stuff isn't really there. And so it brings you to the question of why are people not talking about it as much? And I think part of the challenge for Ethereum is that the story isn't as clear.
The only reason it's not mega selling pressure is taxes. So the average holder, meaningful holder, has been in the position for a while. If they sell, they're going to get a big tax hit. The economics of Ethereum or tokenomics of Ethereum are modestly different, right? It claims to be deflationary like Bitcoin, but it's probably not quite the same, and it's not as widely held.
Anthony Pompliano begins by highlighting the historic nature of the Bitcoin ETF, emphasizing that it might be the best ETF launch in history. The BlackRock Bitcoin ETF has seen massive net flows, surpassing $500 million in a single day. Pompliano notes that this substantial influx of capital is not just a testament to Bitcoin's growing acceptance, but also a signal of its future potential. However, he raises a critical question. Will subsequent ETF, like those for Ethereum, garner similar attention and investment? Pompliano points out that the Ethereum ETF isn't receiving the same level of media attention or hype as Bitcoin. He suggests that the primary challenge for Ethereum lies in its narrative. While Bitcoin is often dubbed digital gold, Ethereum is positioned as a technology platform with significant competition. Despite this, proponents argue that diversification could drive interest in Ethereum ETF. Wall Street's preference for diversified portfolios might lead investors to adopt a 70-30 split between Bitcoin and Ethereum. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Well, let's go look at the Bitcoin ETF. I think, historic thing, probably the best ETF launch in history. One of the interesting stats is that the BlackRock Bitcoin ETF has had more net flows than QQQ year to date. Right, so just massive flows there, over $500 million just yesterday alone. And so I think what a lot of people say is, well, that was the first one. Is the second one going to be as big? And I don't think that's true, right? If you just go and, before I came on, I looked at all the major news sites. People aren't talking about it as much. And so the media attention, the hype, all that stuff isn't really there. And so it brings you to the question of why are people not talking about it as much? And I think part of the challenge for Ethereum is that the story isn't as clear. It's very clear with Bitcoin, right? It's digital gold. When we start talking about Ethereum, you start talking about a technology platform. There's a lot more competition, et cetera. But if you go and you talk to the people at Bitwise, they're launching ETH today. Yep. What they would tell you is, well, actually, there's diversification. People on Wall Street love that. And so maybe actually the benefit that Ethereum will have is just people say, well, I don't want to have just one. I want to have a couple of them. It's Bitcoin, it's Ethereum. Let me do like a 70-30 split, and that'll be good enough for it. And so I think that we really got to see what these flows are going to look like, because the story isn't as clear. You're not going to get access to the staking. So the cash flow that people really like about Ethereum isn't available to these kind of ETF holders. And I think that the flows itself are not going to be nearly as big as Bitcoin. And so the question is, how much impact on price is this really going to have? Well, I think that the flows on the Bitcoin side, some of these funds have 10, 15, $19 billion in them, right? I mean, these are real money that's moving into these things. What I do think is interesting about the Ethereum ETF approval, and probably the thing I've taken away the most, is less about Ethereum and more about the rest of the market. What this signals to me is that all of the altcoins are going to come to Wall Street. It may take a while. There may need to be some regulatory clarity. They may get treated a certain way, but these things are going to come to Wall Street. And so what went from a 0 to 1, is it going to be Bitcoin, is it not, is now going to be a crypto industry. And the reason why that becomes interesting is because people who have this portfolio model or portfolio approach are going to start to apply that to all of crypto. It does not. One of the issues that I think the critics have with Ethereum is that the monetary policy mimics much closer to kind of the US dollar, right? There are these periodic decisions as to whether the monetary policy is going to be more constrictive or not, how many are going to be available, et cetera. So again, the story isn't as clear. It's not as uncertain. What I do think is also interesting is that Ethereum long has said, hey, we're the smart contract platform, and they were the dominant one there. But now there's a lot of competition, right? It's not the fastest, it's not the cheapest. There's these other blockchains that have come forward. And so I actually am of the belief that there will be inflows to the Ethereum ETFs. The Ether price will go up, but it's just not going to be to the magnitude that people kind of are hoping for because of these other pressures. It's the second biggest position, and really the thought process is the Bitcoin position that we own, we're going to continue to hold, but there is an entire other universe there, and so the thought process being you want to be in the asset that is cheaper, faster, and likely going to receive more flows. And if you go and you look at DEX volume, right, decentralized exchanges on Solana is actually eating into the market share of on Ethereum. And so we just think there's a lot more momentum. It's a smaller market cap asset and likely to outperform. First of all, we've been doing a lot of mountain climbing over the years. So, I don't think there's anything new. What I do think is happening, though, if you watch over just the last 2 weeks of Bitcoin has been very sensitive to a lot of these geopolitical or kind of uncertain moments, right? If you go back and you look at President Trump's assassination attempt, Bitcoin on the news dropped immediately. As soon as it was breaking that he was actually okay, Bitcoin ripped higher. If you go and you look last week or last weekend and you see Joe Biden going ahead and coming out and saying he's going to drop out of the race, Bitcoin again, as soon as there was news, drops, comes right back as soon as there's some certainty, he goes ahead and he endorses Harris. And so I think that these assets really are starting to kind of blend the line. It used to be the crypto industry and traditional finance. Now what you're starting to get is just an overall financial market.
I think it's really interesting. So when they were announced that they were quote unquote approved, which meant a few steps left to get launched for trading, price of Ethereum actually went down and actually down reasonably sharply, which was a little bit surprising, but not completely surprising because the trading hadn't started and people hadn't actually started buying Ethereum. But now with launch imminent and real dollars gonna be in demand, the only thing I can come up with is the economics of Ethereum or tokenomics of Ethereum are modestly different, right? It claims to be deflationary like Bitcoin, but it's probably not quite the same, and it's not as widely held, and therefore there's probably some fear and trepidation about whale dumping and things like that would be my hypothesis. The only reason it's not mega selling pressure is taxes. So the average holder, meaningful holder, has been in the position for a while. If they sell, they're going to get a big tax hit. So they're like, well, do I just suck it up and pay the fee, or do I take the massive tax hit and get a lower fee at one of the others? And what we saw with Grayscale was the vast majority of holders said, nope, not going to take the tax hit. And I think in ETH, it's even worse because it had more of a parabolic move. So those early investors, there's no incentive for them. And look, that's...
Pompliano offers a theory about Grayscale's operations, suggesting that it might be undergoing a controlled demolition liquidation, potentially under pressure from larger entities like BlackRock. This speculation highlights the intricate and often opaque relationships within the crypto industry and the strategic maneuvers of major players. Despite market fluctuations, Pompliano asserts that both retail and institutional investors recognize Bitcoin's resilience and long-term value. He notes that significant price dips are seen as buying opportunities, a behavior typical of savvy investors who understand their assets. Over the years, Bitcoin's volatility has decreased, and the persistent inflows from ETF provide a solid tailwind for its continued growth.
This is my theory. That's all it is. I don't have inside knowledge, but it's my theory that I will argue that Grayscale is in a controlled demolition liquidation.
I think that's clear.
They basically were well, again, my thesis. I don't get no inside knowledge. And Barry might smack me if I said this, but I think that someone came to him and said, you know what, we got you, and we could go after and cause a lot of pain in your life, or you can slowly feed the beast, which is BlackRock, and just hand over your Bitcoins to the new big dog in town and charge a really high fee while you're doing it. That's my thesis.
I think that retail investors and institutions have both realized that Bitcoin is a resilient asset that's going to be worth a lot more 5 or 10 years from now than it is today. And therefore, when there are these dips, they look at them as buying opportunities. And if you think of great investors, they understand what they own. And when those assets go down in price, they buy more. And so it's the people who actually question if the price moves against me and should I buy more? They just may not understand what they actually own. And so what's interesting is if we go back over the last couple of bull and bear market cycles in Bitcoin, we used to see a lot of 30% drawdowns. In 2017, there was 5 or 6 different 30% drawdowns. In the last cycle, we saw a couple of 25% drawdowns. Now what we're starting to see is only about 15% drawdowns. And so the volatility is actually being dampened, and there's this persistent kind of inflow coming from these ETFs, which historically was not there. And so I think that really serves as this great tailwind for Bitcoin going through the end of the year. One of the great lies in the Bitcoin world is that nobody cares about the price. Actually, price is the marketing for Bitcoin. There is no centralized team, there is no board of directors, there is no marketing budget. So what usually happens is when the price goes up, everyone starts talking about it, the media covers it, and people go and they say, oh, well, if it went up, maybe it's gonna go up more, and they go and they buy some. And so most people I know actually showed up to Bitcoin initially because they wanted to make money. They wanted to buy it and have it go up more. What ends up happening is as they start to hold that asset, it's very volatile. So it goes up a lot, goes down a lot, and it makes you start to say to yourself, what is this thing that I hold? And it puts them on this learning journey. And so what ends up happening is you go from a speculator looking for price appreciation to someone who then begins to appreciate things like sound money principles and turns you into a long-term holder. And so if you look on chain, you can literally see majority of people who hold Bitcoin are not selling it when it goes down in price or when it goes up.
They're holding.
They're holding, but people definitely are showing up initially because they think that I can buy this thing and it goes up, 2x and I'm going to sell it. And so over time, the Bitcoin community has to educate those individuals, whether they're retail or institutions, to become those long-term holders. I think that Bitcoin will continue to appreciate. I think we will get new all-time highs before the end of this year. I just think that the Bitcoin community should understand that now that we have institutions and ETFs here, the volatility will be dampened. And so it may not go up as high or as fast as you want it to, but still it's this asset that is going to continue to perform because they're not going to stop debasing the dollar.
Pompliano argues that Bitcoin's price is its best marketing tool. Unlike traditional companies, Bitcoin has no marketing budget or centralized promotion team. Instead, price increases attract media attention and new investors, initiating a cycle of speculation and long-term holding. Most people initially invest in Bitcoin for potential profits, but eventually develop an appreciation for its principles, becoming long-term holders. Pompliano is optimistic about Bitcoin's prospects. He predicts new all-time highs by the end of the year, driven by institutional adoption and the continued debasement of fiat currencies. He advises the Bitcoin community to brace for dampened volatility with institutional involvement, which might slow down rapid price surges but ensures steady, sustained growth. Please like and subscribe my channel.